Thank you, everybody, for coming out. Thank you, Christina, for being here. Got a lot to talk about because you've been on a heck of a journey as a founder. But maybe we should start by getting an idea of what Vanta is all about for the folks that might not know.
Yeah, so Vanta is the industry-leading trust management platform. So what that means is we help companies build their security programs, get secure, and then prove that security to their customers through compliance standards like SOC 2 or GDPR, through security questionnaires, or those like long spreadsheets you sometimes get, and also security status pages and trust pages as well.
Very nice. So how did you get into this business?
My first word was compliance as a 3-year-old. That's not at all true. So prior to Vanta, I was a product manager at Dropbox. I was trying to take what at the time was a new product to market, Dropbox Paper, sort of Dropbox's version of Google Docs. And long story short, trying to launch it, giving it away to customers, working really well until the legal team literally walked to my desk and said we were just violating all of Dropbox's contracts because our product was not secure or compliant or pen tested, and it needed to be. Started learning about what that process would take. And again, this was like 2015 Dropbox, so the height of its like Silicon Valley power.
Yep.
The rough answer was it was going to take 18 months and we couldn't do anything else product-wise at the time. And I think where I was both frustrated and later inspired was how it was like, okay, this is a good idea, especially in theory, right? Like, yes, if we're going to ask customers to like put all their company information in Dropbox, they need to rely on us not leaking it all over the internet. And going through this rigorous process where someone says you're okay and people can trust that totally makes sense. If this takes 18 months and involves taking screenshots out of AWS to show that your AWS is set up well, like, man, can I build just something better for that?
Have you always been entrepreneurial?
Kind of. I think I grew up in the Midwest. I grew up in Ohio. I was like a pretty curious kid, and so early internet, tried to buy and sell toys on eBay, Beanie Babies most famously, and also kind of literally. And I think it was just this like fun puzzle and challenge for me. Yeah.
Well, I mean, you've been pretty successful at it. The name of this talk would imply so, at least, from 50 million to 1.6 billion. Let's talk a little bit about that journey, because I'm sure it was quite a ride. First of all, like, how would you sort of characterize how fast that growth happened and how prepared you were for that?
Yeah, so for a bit of context, so Vanta started like roughly 2018. That was like first customer, first product, first Vantan. That's what we call the folks who work at Vanta. So today we are over 5,000 customers, 330 Vantans across the world. And I think it's twofold. One, you're like, well, you're just kind of on the journey the whole time, and it's a little like the boiling frog analogy, where you're like, you don't really, yeah, the water's getting warmer, but you don't like realize it's a 300-person company, you know, until it is, because it was you've seen that whole ramp. I think the flip side is like nothing really I don't know what prepares you to this. Nothing I have found. I'm totally open to tips on this, but like nothing prepares you for this. And just like how, you know, the trope about as a CEO founder, your job changes every 3 or 6 months, I've found to be very, very true. And, you know, people told me that, and I probably, you know, could have repeated it back to you 4 or 5 years ago. But now, having viscerally lived through several versions of Vanta and several versions of my role at Vanta, all with the same kind of job title, but just like very different day-to-days, has been also a little wild.
Was there a moment where you're like, holy shit, this is taking off? do you remember?
Actually, yeah. Actually, in the very early days, we were going through YC, and one of our early customers said we had a brutalist white website, so you can see how our website looked. And it was like the totally embarrassing, this is kind of crap stage of an MVP, and we were charging people $10,000 to use it, and it was working. And there was a moment where you're like, this should not be working this well, right? And the like, you know, combo of like, this is so exciting and it's working, and like, oh my God, I am so mortified by like what I am charging these people and what they are getting back, and like, goodness, do we have to make it better faster?
Yeah.
Right? And like that, holding both of those like in our mind at once.
Would you say that you went into it with this vision of rapid growth, and did you sort of build the systems and processes in the early days in anticipation of growing into a much larger company, or did it kind of happen over time where you had to reevaluate and change things to accommodate the size that you were?
Yeah, I think somewhere in between. I think honestly, if you're going to start like a technology startup and get vendor funding, you're like planning for high growth, right?
Yeah.
It's sort of like if you're like, if we're going to play the game is high growth. I'm going to play that game. We're going for high growth. And I think, I don't know, other people, at least me, are like, oh yes, and I am like smart and savvy and good at my job, and I will set up the structures along the way. And then you get into it and like everything is wrong, basically. And like whatever you thought was going to happen, you know, something else does, and whatever structures you thought, like, well, those were good V0s, and like, let's make another version, you know, anyway. So I think, yes, you know, planned for it, knew the hubris that entailed.
Yep.
Tried to do the best, and like, my goodness, were those solid B0s, let's say.
Fair enough. So you sort of design with growth in mind, but know that things are going to change really quickly, and that you have to hang on for dear life.
Yeah, and I think that's actually the most important attribute for like a founder or an early employee is like, things are just going to change constantly, and that is not necessarily because you did it wrong.
Right.
Right? It's just like you're in an environment where the you know, it's changing so quickly, and so like, how do you like truly roll with that?
Yeah.
Versus get kind of upset or anxious or like, am I ever going to figure it out or any of that?
Yeah. Well, speaking of early employees, what sort of values and principles and sort of company culture did you put in place in the early days, and how do you ensure that you're still staying true to that vision as you expand your headcount?
Yeah, it's tough. So we, at Vanta, we have principles, we don't have values. In some ways, they kind of get used, I think, or what we call principles, other companies call values, but the choice is sort of purposeful, because I think values does sound like a moral choice, right? And there's good and bad. And in our principles, what we're trying to say is, here's how we at Vanta like to work. If you do not like to work this way, that is, you are not a bad person on it. Like, that is totally grand. This just might not be the place for you, and vice versa. And so to try to take like the moral overtones out of it, and just like be like, these are decisions. Some people like apples, some people like oranges.
Right.
You can, you know, coexist. Anyway, so that is like a broad piece. And then, you know, what they are came from the early days of the company. Some of the principles we have, put customers first is a good one. Like, that is, if you can truly live it, I think it's super important, very evergreen. Some are sort of sneaky favorite is decide with frameworks. Came about a year into the company because I was trying to debug why we'd hired someone who was super strong, really passionate, and it was like not working at all. And like, everyone was trying really hard and was trying to debug like, what is it here? And the thing I sort of landed on was, again, for better or worse, at Vanta, we were like very frameworks driven. It was like, you know, we want to put we think our company animal should be a llama. We think it should be a llama for these 3 reasons. You know, like, here's how we made the decision, and we can walk you through it. And this person was very like, I don't know, I think it should be a tiger. And you're like, why? And you're like, because it should be a tiger. And we just would kind of knock heads. And again, we might have been right about the tigers versus llamas, but there was just something there that was so core to the way we were working. It felt like we should make it explicit and tell people and explain it. So again, people could opt in or opt out, and we wouldn't kind of get so frustrated because, again, everyone's trying so hard, but it just wasn't working.
Yeah, so it sounds like it's just a matter of being really upfront, transparent, identifying who you are and making that known, and people can decide whether or not they want to be part of it.
And I think in the early days, honestly, it was that was kind of scary, right? Because you're so little well, who wants to work for me? No one. Who wants to work at this thing? No one, right? And so you sort of take whatever you can get. And I think over time you sort of learn, it's oh, but if you're just transparent and let, again, smart people be smart and make decisions, and sometimes they will work your way and sometimes they won't, but the universe will kind of sort itself out,
right.
Truly, right? And let that happen.
All right. I feel like there's a theme going on here where it's a little bit of careful planning and then being prepared for the worst. And I think that actually is a good segue into the next topic I wanted to touch on, which is fundraising.
Yep.
You've raised an A round and a B round. in very different fundraising environments. Can you tell me a little bit about how those two experiences differed?
Yeah, so we raised our A in January of 2021. We just hit $10 million of ARR, so it was a bit later than your like classic Series A. And so I remember January 2021, it was like the first winter of COVID. There weren't vaccines yet. Everyone was like generally staying at home, bored, hanging out on Zoom, trying to make friends, or like day trade on GameStop or something, or Robinhood. But it was like that environment, right? And that fundraising process was much quicker than I thought it would be, in that sort of went out, had built relationships with about half dozen firms, went out to the partners, said, hey, I think we're going to raise an A for Vanta. Not talking to very many people, really excited to talk to you. I'm thinking about having conversations like through this week, data room the next week, would love offers if you wanted to give one by this date, make a decision by this date. Sort of like outlined a timeline that everyone stuck to, which was like felt sort of magic. It was a little like manifesting, the world you wanted to see there. But that was like a 2-3 week process, almost entirely over Zoom. Did end up meeting a handful of folks in person toward the end, but it was like, let's go on a hike, let's meet outside, right? Again, like January 21.
Socially distanced.
Yeah, it's totally that. But like in retrospect, very fast. And then you go through the rest of 21 and you're like, oh, well then they were like the one day to term sheet or just term sheet over text message stuff. We raised our B almost literally a year ago, May of 22. Then, if you remember that, ice was melting, like public valuations had started collapsing, VCs were getting more and more skittish. It almost literally felt day by day that more folks were like, we don't know what, is going to happen to interest rates, we don't know what's happening in the environment. We're just going to hang out for this summer. We're not investing in anything this summer. And it was just like more of that every single day. Totally different environment. And then for the firms that were engaging, it was like, oh, you have, great revenue, you grew 3x over the year, wonderful, great. What's your margin? What's your retention? What does LTV look like and CAC? And I'm going to, and by the way, how many of your customers are startups? Because we think all the startups are going to go out of business in 18 months. So I'm just going to take that out of your revenue, even though you still have it today. I'm just going to assume it all disappears. And you're like, oh, great. Very different conversations a year ago.
So through that experience, a lot of folks probably in the audience are looking to raise some capital in the pretty similar environments where we were a year ago. What did you learn? What advice would you want to share for those looking to fundraise now?
Yeah, I think it's still rough. That said, I think investors are deploying capital, do want to fund businesses. I think the kind of truism that I learned early in my career is that investors love funding businesses that don't need to be funded. So to the extent, before you do need to be funded, can build a business that has good margins, good cash flow, is like closer as line of sight to break even, kind of, again, maybe counterintuitively, like those are the businesses that get the most term sheets, even though they don't need the money. And so all that you can do if you're setting up your business to put yourself in that position is really helpful. I think the kind of bootstrapping community and like micro entrepreneurs, there's like a ton of like specific tactics and tricks there that are super helpful, also for venture-backed companies. So a bunch there. And then honestly, like any other kind of sales process, just the more interest you have, right? Because if you're only talking to one person and they sort of know their answer will determine the fate of their company, they don't have to be like they can be a human and they will use that leverage in one way or another. Whereas if there are multiple folks who are interested, right, or you can get multiple folks interested, that's always helpful. And then one thing we learned at YC, and I think YC does very well at their demo days, is timelines. And again, as much as you can say, hey, I'm running a process, like here are the dates, and then try to stick them as best you can, is just really helpful because I think it inspires this feeling of investors don't get 6 months to decide if they want to fund you. Like, right, there's this, 6-week long window, and you'll totally support them in making their decision during those 6 weeks, but like, that's it. It's 6 weeks. So you don't get infinity time. They can't string you along. They can't ghost you. All of that behavior.
Okay. Setting some of the terms is what you're advising.
Yeah.
So you were successful in raising that Series B. It was, as, again, the title of this talk implies, a valuation of $1.6 billion. That's a big number. How does the company change, or does it not? I mean, was there sort of a turning point in, how things went?
Yeah, so I think actually from the very early days at Vanta, we've tried to much more internally focus on business growth and revenue growth than valuation growth. Because I think the intermediate valuations, well, they're really easy to think about and be like 1.6 billion, like what does that even mean? Like, I don't know, honestly, right? And it's something of a fake number, right? It's like markup for, all this money on paper that's not real, and it's a bet on investors that we will be able to execute and actually grow the business. Anyway, I think it's just like I think valuations, even in a down market or something, are a little detached from reality. Whereas actual revenue growth, like retention growth, SaaS metrics, those are things you can work on every day and try to get control over and move. And yes, that hopefully will show up in valuation one day. But anyway, we've just like always tried to be very focused on like revenue growth, customer health, customer outcomes. Because like those are the things we directly work on and control sort of day in and day out.
And then sort of the money follows.
Yeah.
And as you said earlier, you can present yourself as a successful business that doesn't really need the investment, but you'll take it, and then the money comes.
Yep.
What advice would you provide for folks in the audience? What do you think is the difference, between companies that successfully scale and sort of achieve their potential and reach that level of growth, and those that sort of struggle at various points to expand?
So I think like a lot of entrepreneurship is about grappling with the reality in front of you, which sometimes is sunshine and roses and like we're #crushing it. And sometimes it's like, oh God, what we are doing is not working and we need to change something. Even though we thought it would, even though it's part of the vision, even though we like told people this would work, it's not. And I think as a founder, you're trying to balance the optimism you have to have, with everyone else, like in the long arc, this thing will work out, with like, oh shoot, but like this is not working out today and we need to fix it. And I do, just like broadly generalizing the companies that kind of work or not, I think the ones that do are much better able to like grapple with the real realities, the good, the bad, the whatever, and more so address the bad or less optimal, and not do that while like demoralizing everyone, right? Or like kind of like Chicken Little, the sky is falling.
Yeah. It sounds like hope for the best, plan for the worst is generally your philosophy across the board. In the last few seconds we have here, what can folks expect from Vanta in the future?
Yeah, we're excited. So we are launching a ton of new products this year, broadly in the vein of helping B2B companies build their security programs, again, and then go demonstrate that security to their customers, show it off, like open new markets, grow your revenue, serve and build trust with your customers. So a couple launches coming up around vendor risk management. It's a new category we're really excited about. And then our core of our business has been compliance certifications like SOC 2. Very much told you that we've gotten very good after 5 years. But a bunch more around kind of moving beyond a SOC 2 or a point-in-time assessment to giving companies like continuous visibility into their security, letting them show that with their customers, build trust, and again, hopefully build their own businesses.
Fantastic. Well, Christina, thank you so much for joining me, and thank you everyone for coming out.